Hey, ladies and gentlemen, it's David Ruff, and I'm coming to you today to tell you some bad news, but some good news. Okay, so number one, prices are going to be higher forever, probably, but we have the same opportunities as the rich people to try to make a lot of money from this. So that's what I'm going to be showing you today. Let's get into it. All right, you guys, we're going to be covering these interesting stories that are going to be coming up, and then we're going to be taking your questions live, like I do every day, to try to help you guys out. So, if we're going to pull over to our article today, our article is Economists Say Life is Going to Be More Expensive Forever. And they said, we're sorry for that. Now, let's go through a couple things because I have a lot of comments on this. Um, the question is the economy still in the gutter, or are things getting better? Are things in the gutter, or are things getting better? Now, this is where I have some comments about that, because why are we still questioning whether we are in recession or we're not in recession? That's what I don't understand. For decades, we always knew that if 2 quarters were negative, that we would know that we were in a recession. So now we're going to be rechanging all of the definitions of recession. Governments don't want you to think that we're in a recession, but listen, even if you didn't know the definition of recession, let's forget about that for a second. You and I know we're adults, man. We could see, right, what's outside. People are losing their jobs. People are getting laid off. Housing prices are crashing. Stock market prices is crashing. Crypto is crashing. Everything is crashing and no one is safe. So it begs the question, like, we see what's happening. So I feel like we're getting gaslit by people who are telling us, don't worry, everything is fine. So I question, why on earth are we still asking these questions? All right, now let's go back to the article. The article goes on to say from June to July, the CPI's rate of increase went from 9.1% to 8.5. Now we're going to be looking at a chart about that in a second, but to go from 9.1 to 8.5 is nothing to celebrate. But ironically, that day that the news came out that it went down this much, everyone was celebrating. Listen, homes are down 50, 40%, 35% in my areas. The cottage country is down 50%. We were just looking at one yesterday. 50%. $1.5 million property dropping $750,000. This is earth shattering, but it only changed the economy this much for inflation. All right, let's continue. Since World War II, we haven't seen prices across the board come down in a sustained way. When prices rise, they tend to stay high. Now, that is a rule of economy. When there is a lot of money supply getting built into the system, things have to keep getting more expensive. Always. And so, though it's not always a straight line, if this is the line, of course, the economy goes a little bit up and a little bit down over money supply. It's going to continue happening. So, things will continue to get more expensive. Home prices will probably be dropping quite a bit more than where they are today. If we continue on this article, it says CPI consistently underestimates rental inflation because it doesn't factor in rising prices in new rentals and leases, nor does it capture regional variation or rental increases since the pandemic began. This is a big, big issue because they can change the way that housing is measured. So we know entire cities are down 35%, like I said, 40%, 50%. Yet when you go and look at the national index says, don't worry, we are only down half of 1%. Half of 1%. We did not drop half of 1%. We have areas here that have lost over $1 million per house. That's a big deal. All right. So it does not put that into the CPI or consumer price index. Then we come to another point that they mention here. Landlords who rent more than 1,000 units can easily weather higher costs, unlike tenants. Now, there is always a war between landlords and between tenants, one side and the other. It's always those two sides. But it's not this faceless company. It kind of is that owns all the properties. But who owns that faceless company? Most of the time, it's shareholders, and it's shareholders in their pensions and stuff. So those same people who can't afford to be buying those properties those same people own shares or maybe work for a company. They work for a company that has a pension, and the pension owns the apartments that they're trying to rent. Or he has stocks in a portfolio, like some kind of a mutual fund, and it is sitting in that company. So even though if these companies, they're like, let the company go down, but they don't realize their own stock portfolio may be holding the stocks of that company that might go down, and it's hurting them as well. It's the whole system is built on this debt loop. So this is not always easy, but there is always downriver effects. And here is where the comment that they say: tenants seem capable and willing to pay these increases. I don't like that they're willing to pay the increase. Are they willing, or are they forced? Will they be on the street? Because we saw during the pandemic that we could not even get any places rented. But today, if we're talking about today, we are having units with 6, 7, 8 offers on it, and they're offering $100, $200, $300 over asking price just to be able to secure it. The demand for rental is so high because there's not a lot of landlords that are operating here. So, this is just something to think about, that once a new price point has been established, firms are reluctant to move prices downward, recognizing that consumers have already accepted the higher price. So that's what we'll leave on, because that is kind of scary, right? The best we can hope for, the article continues, the best that we can hope for now is price stability, but don't count on prices reverting to pre-pandemic levels. We might have to read that again, because this is probably what's got to stick in your head the most. The best we can hope for today is price stability, not go up any more than it is today, but don't count on prices going back to where they were before the 2020 shutdown. So don't count on that. Now, that is kind of sad, but now we have to figure out what can we do to move forward. So I want to share with you just a couple things that I saw on the internet. If you go online to Bank of Canada, just pull up the Bank of Canada, and in the Bank of Canada, write inflation in the search bar, and it will come up with the inflation control target. And they are absolutely committed to bring inflation down. The inflation control target, it says, was adopted by the Bank of Canada in 91. It's been renewed several times. The target aim is to keep total CPI inflation at the 2% midpoint, 2% midpoint of a target range of 1 to 3% over the medium term. So they want it between 1 and 3%, but 2% is what they're aiming for. The bank raises or lowers its policy interest rate as appropriate in order to achieve the target, typically within that horizon of 6 to 8 quarters. So do you guys need to read this again? They want 2% inflation. And how does the bank do it? They can't do it any other way except the bank raises or lowers its interest rate, and it hopes to get there within a year and a half to 2 years, 6 to 8 quarters. I mean, that's pretty clear, right? So they want to attack it within 1.5 to 2 years, and they need to get it to 2%. That is their mandate. So they're going to keep on working on that. But let's look at where inflation will go. That's a lot of talk, but their talk doesn't match their actions. So we have to watch actions. If we look and go to tradingeconomics.com, we can look up the Canadian money supply. They also call it M2 money supply. If you look it up in the past year, it looks abysmal. It looks like it's going straight up. If we look at it on a 5-year chart, it also looks abysmal, like it's going straight up. If we look at it on a 10-year chart, it also looks abysmal because it's going straight up. If you look on a 25-year, it's straight up. So it's all going straight up all the time. But if we even zoom out to 1 year or 5 years, you will see that the interest rate, the amount of money that they're printing, is continuing to go up. Of course, it's slowing down the curve. It's just slowing it down a little bit, but it's still increasing the money supply. And increasing the money supply is what will make things more expensive. As you can see, as it goes through 2022, they are keeping on the gas by printing more and more and more of this stuff. So this is what's going to bring more inflation. So this brings us back to, what do we think that's going to happen? Because we all have to make our own predictions of where we're going to go. The governments around the world injected 35 trillion into the government, into the economies, and now they're trying to suck it out. What has come out so far? So we already know that the homes here are losing, some homes $1 million each home. Hundreds of thousands of homes living that. So they must have sucked out a lot, but the economy is not showing that in the real numbers. They've only taken $1 trillion out of crypto, $3 trillion out of stocks yet, but they haven't taken out that 35 trillion yet. And we've only seen inflation go down a fraction of 1%. So how much are they going to have to suck out of the system? How much damage would they have to do to bring it back to 2%? Quite a bit. So we are stuck between a rock and a hard place here, because when you put a lot of stuff on your credit card, you only have two choices: is pay it off today or pay it off tomorrow. And tomorrow is going to have more interest. And so now the bill is coming due for what we started in 2020. So we have to be careful. There's probably a lot more going to come. And there's probably, if history is any guide, a high probability that this inflation is going to be stubborn and stick around for quite a few years to come. So invest wisely, my friends. Anyway, I'm always here for your health, wealth, and happiness, as you know. And if you know anybody that this could help, please send it to one person. It would really help me out. Please remember to like and subscribe to this. It really helps out the algorithm. We really want to help more people. And I'll see you on the next video, guys. Have a great night.